Testing, testing, 1, 2, 3. Yeah, so I don't know what's going on today. The system's really slow. It's kind of strange. But anyways, good morning. How are you? Happy Friday. One more to go. COVID-19 is over in the state of Georgia. Nightclubs are going to be open tonight, so I got my pleather pants ready. Dusted off my old glow sticks, and I'm ready to go clubbing. Yeah, it's going to be a big day. Okay. Mehdi, that's a day trade, not a swing trade. So anyways, and by the way, Mehdi, a day trade, we're looking at typically somewhere around 50 pips risk and 150 pips profit for a day trade. For a swing trade, we're looking for 100 pips to 300 pips, depending on the market conditions and time of year and such like that. All right, so anyways, this YouTube, things seem to be slow today, so hopefully everything's coming across well. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool. So, g'day, mate. How are ya? How's your mum? My name is Wayne. I'm the Chief FX Market Strategist for Traders Way. Thank you for being here today. If you find these webinars helpful, then please open an account at tradersway.com. Start with the demo. Takes a few seconds. You can download MT4, MT5 even. Do some test trades and see if you like it. Oil not moving? Well, not down anyways, right? So anyways, visit Traders Way. They want to earn your loyalty and respect, and so they're bringing these webinars to you by sponsoring the Forex.Today YouTube community, and I appreciate them for that. Me. See, my COVID's kicking in. So anyways, nice to be here. Make sure you ask questions and get involved. Please click the like button. Please subscribe if you're new. Join the community of 13,000 foreign exchange traders that meet here every day. We're going to cover technical and fundamental analysis. Busy week next week, so make sure you subscribe so you can get alerted to the next webinar. And today, let me know what currencies you'd like to cover, and I'd do my best to cover them for you and answer your questions. Aussie Yen? I haven't looked at Aussie Yen forever. That was funny. In the group last night, I think, what was it? 5, was it? Was it 5 groups out of 7 groups covered the Aussie Yen? It's pretty funny. And half of them said up and half of them said down. I'm not sure what the middle one said. But anyways, yeah, never heard of it. All right, let's start here. Aussie Yen. Okay. In fact, I'll even kill some of the indicators, make it real easy. How low, how low. Okay. Okay, and what we were talking about, I guess, 12 hours ago, 13 hours ago. Fresh 5A cross, and, oops, didn't mean to do that. Let's go back here. I was just trying to get my drawing tool. Where is that sucker? Oh, it's way over there. So what we were talking about 13 hours ago is that the thing in play here is either this, if you're a bull, or this if you're a bear. That's that. Okay, that's the big thing going on. Let me change colors with this pair. Okay, off the 21, fresh 5-8 cross up. So if you can breach this 7.00, it'll probably go up as high as I think we said 73. Basically, ride the 21, breach the 55, and hit the future 200 EMA. Okay. Smart, if you want to do commodity future or currency futures contracts instead of trading the spot price, then you would open up a futures account at a futures broker. Okay. That's how you do it. You'd open a brokerage futures brokerage account. But we trade spot, not contracts. Okay. So that's that. So if you're a bear, you think this 55 is going to hold and drop you down. It seems very flat. Remember, the flatter it is, the less trustworthy it is. Okay. And bulls instead are using the 21 as support. So it would breach here and come back in the future and up and up and up. And so what bulls are planning is that this is doing this. You get a crossover, oops, and then in the future like that. Okay. Yeah, well, a tie. The only thing though is this is moving up. Okay. We don't know if it'll make a higher high. That is moving up. So that's a little bit better than the bears. And also we have a 5-8 cross, which is a little bit better than the bears. That's all. So I'd say the bulls have a little more going for them on this. So I wouldn't quite say a tie, but close. I think my carpal tunnel's kicking in. All right. All right, let's do some Bitcoin, some gold, and some oil. Okay. It's trying to work its way up. Okay. It fulfilled the destiny for the week. This is the M2 buy zone, and this is the target if you bought in the M2 buy zone. So that's a weekly swing. So to the person that asked about what is a weekly swing, Mehdi was it? Mehdi, this is what a weekly swing would look like. So typically you buy down here and you'd target here, and then next week we'd be buying here and targeting there. So we would plan this out, and we would have a down and up on Tuesday. And so that would be buying it at 7,400, targeting 8,400. So that would be $1,000 rise in Bitcoin next week is how we'd plan that. Sorry to hear that, Prince. Yeah, actually, it was. I think we had a lot of fun. The swing trading group met for, gee whiz, I think it was 2.5 hours last night, right? It was long, but it was definitely fun and informative. I like that we have it's so interactive and that we have open conversations as a group versus just some guy babbling like me babbling for an hour and a half. I like the fact that I hear your voice and I see the way you think and we can collaborate as a team. So I like that a lot. And by the way, did you notice? Did you guys log in and watch the recording? I messed around with the playlist to ensure, or at least try to force YouTube to put the new one at the top. You think you think that would be automatic, but I think it's right there at the top, isn't it? It took me like an hour to download it and an hour to upload it. So it's working. Cool. Awesome. All right, so that's biddy. Let's do some oily. Jim, they're all on the playlist now on the login room, so I'm going to reorganize things. Today, in fact, I'm going to try to do it. Okay. Well, some people say that if it doesn't organize it properly, sometimes you have to like go to the bottom of the list and the new videos on the bottom of the list, and sometimes the new videos on the top of the list. So I don't know why it does that. Right. So open it up and then look. Sorry guys, I don't know. That's YouTube. I definitely uploaded it last night. Yeah, that was me. I reorganized them. No kidding. I hate all this technology nonsense. Well, I definitely did it. Stayed up, moved my life around to do it. So, anyways. So, looking at oily, wonder what we'll get next week. Maybe something like that. So the next question is test the $5 mark. Well, that's not in the technical analysis. So Toxic Ben, we don't kind of do maybe. So technical analysis wouldn't indicate a retest of 5. I mean, it could, but there's nothing on that chart that suggests that it would do that. The best you could probably hope for is 760. Okay. I mean, technically, this says as high as 23, but it's hard to believe. Hard to believe. This is a conservative target, by the way. It should do more than that, but we'll see. I just look at that as an obvious role reversal and Caution zone, it looks like a sell zone for next week. So 20 probably would be defended. So okay. Well, but you still have to use technical analysis. You can't just use analogy here. So, I mean, the best way in that case, if that's what you're going to do, let's reset this. Then you're going to try kicking it off the 21. Let me get in a little closer. No, it's got to be the 4 hour. Okay, in that case, you're going to play off the 4 hour 21. And okay, it doesn't look like that's happening at the moment, but you're going to plan this and down. Okay, not in the moment. Oops, didn't mean to do that. Not in the moment, but okay. Yeah, I can see that now. And then what are you doing? You're dropping into the 60. See, the problem is you don't have any bearishness yet. So I guess what you're doing is your hope is farther ahead than my analysis. But like even on this chart, it's not bearish yet. So I'm not thinking that yet, but yeah, you could be waiting for this to do, so maybe on Monday, I guess. I mean, really depends on what happens today, but it's not bearish on the 4 hour. It's not bearish on the 1 hour. I mean, it could be in the future, okay, but I don't see it yet. You're ahead of the analysis. Okay, I think maybe just a little bit too much hope. Okay, hope's not a strategy. So it's close. I mean, if you're going to be a bear, just wait. Your timing's not good now. That's all. Would bears be aggressive at 20? Well, I don't know what their opinion is, but is 20 resistance? Is that a place a bear would sell? Every day of the week. Not a problem. So obviously there are bears there. Cool. And then here's the gold. Okay. It could go a little higher. It should go a little higher. And if so, that would bring some additional bullishness with it. But right? So I think we have this going up to 1767. So that needs to be up for today, or more like this next week. But the way we had this in the cards earlier in the week is we expected this. Do you guys remember that? Right? Remember, we were saying 1680 up to 1780. We said that on this area here, Monday or Tuesday. That's what this whole area was about, this role reversal. If COVID-19 disappeared, would economic recovery happen fast? Yeah, people would go and eat at a restaurant. If all the restaurants opened, people would just pour out of their apartments in New York City and go straight to their favorite restaurant. Just like customers disappeared all at once, they would all return. Well, Brooke, if you are Applebee's and you laid off your waitresses, you just call your waitresses and say, hey, we're open again. Come on back. And they show up. Doesn't take time. You don't have to find new employees. You just rehire your old employees. You already have their legal documents on file. They're just like, come back, we're open. Okay? It's not like you have to find new people. Well, I went to Home Depot yesterday, Mr. High Volt, and there was a line up. You had to wait in line to get in. But I went because it rained all morning, and I figured there wouldn't be a line because 2 days earlier, I went to Home Depot and the line was long and everyone's wearing their masks. And I'm like, I'm not going to wait in line just to get in. And 2 days before that, we drove by and, like, again, this ginormous line. So people every single day are lined up to get into Home Depot. So I don't think people are that afraid. I think if the restaurant's open, they'll go. Maybe it won't be a mad dash, but within a week, let's say, there'll be, I don't know. So, anyways, people don't seem to be too shy. People are, yeah, I guess so, in New York in particular. What do I think about this opening? Not my, not my call. I don't care. I'm just a economist and trader, so I don't care. Honestly, I don't care if tattoo parlors are open or not. I don't care. If the governor's wrong, I don't care. Okay. Well, Brooke, in that case, they wouldn't open. That's the wonderful thing about capitalism. If there's not enough money in it, you don't do it. So the government's simply saying you can do it if you want. Great. Now you make a decision. If you only get 50 customers, don't open. Cool. Okay, if you're looking at it that way, that's a risk off play. How low will I slide? Oh, well, that makes sense, Brooke. Boom, 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 boom. The other way to play this is 120 as support. Which one do you? Which one are you? So we got a lot of news next week, huh? Well, let me answer the question about Swiss yen. I'm thinking about doing it this way. I'll move. And I'm tired. So here's an interesting conversation. On Sunday, we talked about how do you handle this move here. On Sunday, we talked about this. Sunday. And it's now Friday, but on Sunday, we talked about this. And all these orange lines up here, I drew as different levels of resistance. And I said, I know you're probably bearish and you're probably eager to trade the first retracement you get. And I said, my experience in this situation is it's going to want, oops, make this blue. It's going to want to rise up more than you think. Potentially all the way back to 134 before it even considers, okay? And so here it is now. It's been the whole trading week. That was Sunday afternoon at 5 p.m. Sunday. And so now it's Friday morning, and let's see how much it did pull back. What an amazing coincidence, huh? Six 1.8, 61.8%. Isn't that interesting? You can't trade there? Sure, you can trade there. So here's what I said way down here when we were at 132. I said, don't be shocked if the retracement goes all the way to 134. So it went to 133.50. 150 pip retracement. And I warned everyone about it way down here. So whether it went here or here, it's just a different fib level. Okay? But tradable. Sure. Very much so. The thing is, I'm trying to help you anticipate when to hold them and when to fold them. Okay? And one of the things we talked about is I said newer traders are going to want to be aggressive. They're going to want to sell here. They're going to want to sell here. They're going to want to sell, right? They're going to want to sell the first rise. Then they're going to want to sell the 3A2. They're going to want to sell the 50%. They're going to sell the 618. And they'll give back all the profit from the previous move down. And I said, that's best case scenario because I think in many cases, the amateurs would have missed the first move down, and so now they're aggressive late, they're aggressive late, they're aggressive late, and they pay the penalty, and they get no profit here and 2 or 3 or 4 losers there. Meanwhile, this is what I think a more experienced trader would have expected in the first place. Okay? Understanding when to be aggressive and when to hold your cards close to your chest. Do I use Bollinger Bands? Yeah, I don't not use them. I mean, I don't put them on my charts. They're not that. I guess they're not that helpful. I mean, they can be, but not a big deal. So that video's not up there, huh? See, the thing is, if you know, then you can anticipate and be ready. That, son of a, I hate Windows. Anyways. Oh, I should probably go to swing. So we can check here. So it should have been weekly, right? 2019. You know, I added it. It sucks so bad. What's the date today? The 24th. Yeah, it's right there. Oh, wait, that's January. Sorry. Duh. I'm slow today. January. Sucks. Sucks. Stupid YouTube. Unbelievable. You know, I stayed up late and everything. I moved things around. Swing trades, day trading setups. Wednesday, April. Thursday, day trading setups for Thursday. And then, yeah, son of a, it's not there. All right, it's not my bad, but it's my bad. Ultimately, it's my fault. Sorry, I went through great lengths to add that to the list last night, and it's not there. All right. Sorry. Gold, dang it! Sorry. Okay. Thanks, Jim. It's just that I did do it. I did do it. So that's the part that drives me nuts. I made the sacrifice and did it, and it's not there. So why did I make the sacrifice? Could have not made the sacrifice, but anyways. Let's take a look at some dollar. Dollar. What's up, Ricardo? Sam B means Australia was short on US dollars. So we're not quite ready. So what we want is US dollar weakness. Here's something out of the course. Gee whiz, I'm clicking all the wrong buttons. I'm slow today. Sorry, guys. Mentally tired, I guess. Sort of almost an out of position into a counter trend trade. So that one worked pretty cool. Back down to the central. That's cool. So now you have to decide for next week if you're a risk-off person and you think we're going to get some bad news, then you're going to look at that. If you believe we got good news, then you're going to do this. So it'll go I mean, you end up 141. Yeah, so up 100 pips and down 300. That's what you think from here. You might have already missed the front run. So a bull would have looked at selling at this 141. This might have been something we planned last night, in fact. Let me drive in. What team covered USD CAD yesterday? Was it Team 2 or Team 3, I think? I think one of the teams did USD CAD. It was the risk on team. We were talking about oil. Team 3? Yeah, it was Team 3, wasn't it? And they were bullish, right? They were risk on. So Team 3, that's right. Team 3 had the role reversal too. They had this. Yeah. Yeah. So they nailed that. That's how you do it, huh? Nailed it. When do you use them? All the time. That's when, Ricardo. All the time. You use them all the time on all time frames. So yeah, so this is good. Team 3 had this completely planned out last night. Very cool. Yeah, and we knew that. That was the other thing, right, Peter? We knew that this would be the issue. And I said, worst case scenario, Friday will close and you'll be stuck at 140. Right? Cool. So, anyways, there's some newer trader questions, which are totally cool. There's a playlist on the FX Bootcamp YouTube channel. I don't. I probably have to type it. If you go to the FX Bootcamp YouTube channel, there click on playlists, and there's one called Free Forex Training Course, and I think it's 4 videos long, and it'll give you an overview of things like the 2155 EMAs, like why I use them. So the question Ricardo asked is, when do you use them? Well, I use them all the time because they measure market. So why would there be a time when you're not interested in the market? Well, you wouldn't be interested in the market if there is no market, like you're ranging sideways. But even then, you knowing that it's moving sideways would be informative, right? But in this case, the 2155, looking at on this time frame, says you should short the next 5/8 cross down, which is right here. Now, the interesting thing about Group 3's trade was that they anticipated that here, and they had already planned that, and that's how good traders trade. Is they're anticipating the 5A cross down, they're anticipating it at the cycle level, they're anticipating it at the fib level, they're anticipating it at the pivot level for this week, they're anticipating it on the pivot level for last week, and so therefore when it comes up here, they drop it like it's hot on a 5A cross. Okay. Yeah, so yeah, it was a fun day. Team 3. Mr. Morris bought it at 140. I could see that. I could see that. Looks like you might have done it a couple of days ago. That's too aggressive for me. I can see it. Well, it's no place for slackers. That's for sure, Ricardo. Yeah, you got it yesterday. Yeah. That's a bit aggressive for me. I don't know if I could do that. So, as a bull, if I was a bull in this situation, like maybe here, but even then, I'm going to look for something like this before I really play the game. Like I understand this. There's just this is significantly less risk if I bought next week like this. Okay, and I'd be playing a new. I'd be playing this sort of like a new channel off support. Okay. But buying here, I get what you did, but drops like this, I don't buy. I just don't buy drops like that. Okay. So the best I could possibly do is, maybe something like that. But like I said, I don't even like that. Okay. Oh, is that right? What team was Bond? That was team 6, maybe, wasn't it? No, it had to be earlier. Team 2. Must have been team 2. Let's take a look at that. Yeah, was team 2, yeah. Euro. Let's see. What did they have? I don't recall it here. Did we have it here? Maybe it's here. Oh yeah. Well, of course, it would have been his charts. Yeah. What was it? What was the plan? Do you guys remember? I'm drawing a blank. Oh, so okay, but how far though? So let's relook at it on a bearish. Was it short from 830? Huh, I still don't remember the setup. Yeah, it must have been from it. If you were going to do it, it had to happen like at that moment. Like Luca, I think that was your similar to you, right? Your trade was at like I forget even which currency pair, but it was at a midpoint psych level, and I'm like, well, if you're right, it has to go up like right now. You got to have your finger on the trigger, and I think it did go up for several hours right off your level. Yeah, but it didn't last though, did it? Or did yeah. Triggered order in the night. Okay, cool. So, so it would. I'm thinking we would have met here. So not sure. So there must have been the trade must have been sort of this level here. But whatever. Yeah. Yeah, lots of Aussie Yen yesterday. But it did pop up, but but it didn't fulfill any sort of mission. Yeah, I get that. It's just kind of indicative of the market conditions that we're in right now. By the way, I know I'm slow as molasses today, but would you take the opportunity to click like? Just tell YouTube that this is quality content and you want it to be around. Would you please do that? Very few have actually clicked the like button today. And I know it's me. I know it. I'm tired. Mentally, I think. I feel slow. I feel slow for sure. Like I was a few minutes late to start the webinar, right? Because I was early. So I'm like, oh, I guess I'll watch a YouTube video, right? And then I'm like, and I look and I'm like, 8:03. I'm like, what? So just like slow. Like, oh my God. Cool. So 50% of you guys like today's video and the other 50% don't. All right. So Euro weak, Aussie strong, CAD strong, Yen weak neutral, dollar neutral, Swissy weak. So if this is down, this is coming down, this is coming down. This is a little bit of risk on. This is risk on. This is risk on. This is risk on. This is risk on, and the euro sucks. Well, thank you guys. So, yeah, everything looks to be leaning towards risk on. So that would benefit Aussie Yen long trades from last night's discussions. Oh, no, no, no. Let's do exotics. Okay, so that would be indicative of buying more exotics, aka selling exotic pairs. Yeah, I did want to cover that today. Thank you. So, yeah, here's the trade plan. Okay, so this one's being challenged. Okay, so what I said several weeks ago is like, I'm very open-minded to selling this at 8.0, and we're getting resistance before 8.0. Yeah, well, I think Meta's plan is to have risk on for, let's say, 3 days, right? And then risk off. There's a lot of news next week, and none of it is likely to be good, but much of it could be not as bad as it could be, which is actually good news. So if you remember, was it yesterday we lost 4.4 million jobs, and that was a good news. Why don't you go to the website and check it out, Frizzit? I'm not here to sell you. Boo, 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 doo, boo. I mean, at 80% off, what do you need besides the 80% off? Like, that's what you get. You get 80% off. If you want it, you'll take it. If you don't want it, don't take it. Right. So anyways, yeah, so going back to this, I was thinking, not using technical analysis, I was just thinking 8.0 would be the most epic place to short this. And that's even so this suggests some more up before the end of the month. So this still, based on what I want, let's put it this way. If I want to sell it up here, the way it's going to have to go down, well, it has to go up. I need this to kind of go up, okay? Which would then move these pivots up because I want this pivot. Let me do this in a different color. I want this pivot to be up here. So therefore, I need this to make a higher high, close high, and then out of position trade in which I would be riding the 4-hour 21 up. Let's say, so we would be here Monday after non-farm payrolls, which is what, May 8th or something. And if we are, I'm going to look for taking this down. So that's how that would mechanically work. I have to move this pivot from here to here. This has to close higher. So that means up all next week and breach the R2, maybe go to M5, whatever that is, which is here. And then an out of position move to take it further. And we get to 8 in the next 2.5 weeks, which means 3 weeks from now, I short this and I never take profit. Okay. Does that make sense? Marries up with your peso trade. Yeah, well, if we get some repatriation, so to look at the peso trade, so remember, do you remember I got a lot of questions early this week about shorting the Mexican peso? What did I say about that? Remember, we opened the week at M3, so people are like, should I short peso, right? Should I short the USD peso? Should I short? What did I say about it? I said, okay, you are on the weekly M3, and that is where bears would sell, but ... What did I say? I said it's too early. I said you're probably a week and a half too early. Okay? So yeah, it did go up. And so what I'm expecting now is maybe this move. Okay? And the cool thing is, you know, this is a prime time one, because not only do I want repatriation, I want the first of the month to take place close to a Friday. Okay? Yeah, you could do that. I'm okay with that because you're playing it in a logical fashion. Um, so really, the trade I'm talking about is a repatriation trade. It's not a carried trade. It's not a swing trade. It's not a scalp. It's just a repatriation flow trade. So in a normal month, 2.63 billion get put onto that trade, my repatriation trade. Now this might drop very significantly. This might only be 1.6 billion because less money will flow back to Mexico with so many, let's say, seasonal workers in Mexico having lost their jobs, aka they don't have money to send home. So the flow is likely to be a lot less than normal, but the timing of it is the same. So again, if you guys have no idea what I'm talking about, again, is that on the Trader's Way YouTube channel? I did one called How to Trade the Mexican Peso and Why It Works. That's something else that you should probably look up so that you understand what I'm talking about. Okay. Oh, how would they do it? They call their banker. That's what bankers do. Just a transactional trade. That's what banks do. That's why you have a banker. So the pure play, I think, right now is if you're risk on, the U.S. dollar should weaken if you're right. And part of your dollar weakening play might be that the Fed and the Treasury have put trillions of dollars in the market. All right, cool. You also, there's a lot of dollar demand from banks around the world, sort of unusual emergency type demand for dollars. And that's why the dollar's been so strong. But if you think the most of that is over and that we're closer to a turn in the market, nothing says this on the chart. But if that's your play, understand your logic. And this would be pure play because eventually, once the unusual dollar demand is gone and we focus more on a recovery, then the dollar would likely weaken. And then risky assets look good again and you invest into Turkey. Now, also, emerging markets like Turkey, they get hit by bad inflation. Okay? In a sense, like the way I look at it is OECD countries export their inflation. So, like Europe has no inflation, the UK has no inflation, the United States has no inflation. In fact, we're worried because there's zero inflation, right? It's horrible. But then you go to South Africa or Turkey or other developing economies, and all of a sudden they have tons of inflation. And and it's strange, right? So, anyways, at some point, if things are bad and Turkey's having trouble, they might have to raise interest rates. So, and that would appreciate. So, anyways, what I'm trying to get at is if you're thinking in the next 4 or 5 weeks, this changes direction from up, 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 then this is what it's going to look like. Okay? We're going to need to come back down to this 200 EMA in the future, probably double top at 7.0, and then you take it downtown. And you never get off the train. You take it as far downtown as possible. You give it to your children. You put this trade in your will. If you get that correct, you stop there and you walk away. And you never, ever, ever take profit. Okay? Yeah, Alexander. It wouldn't be Goldman Sachs, but probably JP Morgan. Yeah. So guys, if you look at this, let's look at USD Turkish lira. So if you sold this, you would be paid an unbelievable income. Okay, unbelievable. You'd almost earn, I'd say not quite, but let's say by the time you cover the fees and stuff, you probably collect 1,200% a year. Somewhere between 1,200 and 1,500% a year if you're leveraged 100 to 1. So next week, guys, we got a lot going on news-wise, lots of central bank information. Right? Well, you keep doing it, of course, if you want. Right? So, like, this account is what? It's got, like, I don't know, $35,000 or something in this account. So, over the course of, let's say, a month, I get 3 standard lots on this. Actually, 2 standard lots. On interest alone, I double my account by the end of the year. I don't understand your question, Alexander. Of course, FX trades on weekdays. Yeah, so guys, on my Euro Turkish lira, so I was short Euro Turkish lira for 10 months, right? I made 0 pips, 0. In fact, I lost 3 pips because I wanted to mark it down as a loss. So I made negative 3 pips. Okay. Dark pools have to do with stock trading, not foreign exchange. Okay. So I was in this for 10 months. I made negative 3 pips, and my return on investment was 1,000%. So if you could do something similar on this trade, how often would you want to short it? Every time you can. Oh, because of weekends, banks are not open, Alexander. Okay. And your other question about dark pools are private exchanges. So what happens is Goldman Sachs has clients and they own stock. So client, 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 and it's all stocks. They hold all their stocks. Okay? So now Goldman Sachs uses their books to act like an exchange, And this client says, I want to sell my some Apple shares. I need the cash. I need the cash. Get me some Apple shares. So instead of putting it out in the system, they call these clients like, hey, do you want to do a private transaction? Do you want to buy? Now, they don't actually do like ask anymore, right? So this one says, put it into the pool and see if any of your clients are buying Apple. And so they put it into here and this client buys it. Okay? And all they do is move the shares here. Okay? And now this client owns the Apple shares. Okay? And that's that. That's what a dark pool is. So they made the trade. There was an exchange. So this person now holds money. Okay? And it never enters the open market. That's all. So that's what a dark pool is. And you don't know really who you're buying from, nor does it really matter. Okay. Now this started because of front running. So what's the exchange in in New Jersey, across from Manhattan? Is it Bats? I think it's Bats, isn't it? So some clever people figured out in Manhattan, you had like J.P. Morgan and Goldman Sachs, right? And Bank of America. And you had all these banks and trading houses. And they figured out, using the telephone exchange, which was built in the 1800s, J.P. Morgan might be across the street from Goldman Sachs, but their phone line might go like this to New Jersey and then back and then to here, where Goldman Sachs just might go here and Bank of America might go here, here, here. And what they figured out was, if you measure this, you know, because this took 0.0005 seconds less, and this took 0.3, and this one took 0.4, they could figure out who actually made the trade. So they would flash orders, and suddenly a big block trade would come in of buy Apple, but it would be a big order. And by calculating how fast the order came in, they're like, it's JP Morgan, because it took so slow, because they had physically longer cables. It took a lot longer to get the bats. So they would flash an order, okay? But JP Morgan wants to buy 10,000 shares. They would flash an order for 5 shares. And the way that the bats would work is they wrote the system so that, irregardless of size, sort of based on commission and some other things, they would fulfill the order, even if bats could only put 5 of the 10,000 shares in. So people figured out, I will sell you 5 Apple shares for 0 commission. In fact, I'll pay you $5 to buy my 5 Apple shares. That fills the Apple order in JP Morgan here. So now they know it's going to be routed to another exchange, in which they then front run. They buy a whole bunch of Apple and then sell it to JP Morgan a half a second later and make $70,000 profit in a half a second. By finding out that JP Morgan is buying a large order, you only sold them 5 shares and you did it for free, and then you know the exchange they need to go to in the next exchange to get the rest of the 10,000 shares. So they still have 9,995 shares to fill. So you would, at the same time you're selling here, you would arbitrage, buy the Apple shares from the other exchange, knowing that soon as it comes into that new exchange, the second exchange, you would then sell all your Apple shares you just bought a second ago, and you would sell it to JP Morgan at the slightly higher price. You understand? You sell them 5 shares for no commission, basically. Not $5, 5 shares. Meanwhile, at the same time, you go to another exchange and buy 9,995 shares at market price. And then a half a second later, sell all 9,995 shares to JP Morgan, but for slightly higher than what you paid for. And the only reason you bought the 9,995 is you learned from the first exchange that JP Morgan was going to buy them at market. So you slowed them down for a second, went to a different market, bought everything they were going to buy anyways, and then sold it to them at a higher price. All in less than a blink of an eye. So then JP Morgan and Goldman Sachs and stuff started making their own pools to avoid this. Isn't that neat? Do you understand the concept? Took some smart people to figure it out though, right? So I think it was Renaissance Capital that made billions of dollars per year, would make thousands of trades and never lost money ever. Never had a losing trade. Now you're like, well, Wayne, you told me a high winning percentages. Well, dude, we're talking about trading. All they were doing is figuring out who was going to buy the orders and then front run everybody every single time. Okay? It's basically inside information. If you know JP Morgan has already said 100% they will buy 10,000 shares of Apple right now, and you don't own any Apple shares, but you know they already have the cash on the table. So if you know they have the cash on the table, 100% sure they will buy 10,000 shares right now, then you need to buy 10,000 shares, and a half a second later, a thousandth of a second later, you say, okay, JP Morgan, here's 10,000 shares. But a thousandth of a second ago, you owned 0 Apple shares. That's what I'm talking about. Literally less than a blink of an eye, you figure out JP Morgan's going to buy 10,000 shares. You buy 10,000 shares, and then you sell the 10,000 shares to JP Morgan. All in less than a heartbeat, a blink of an eye, less than a hundredth of a blink of an eye. Buy, sell. Because you figured out what JP Morgan is doing right in the instant. Okay? And they could even figure out who was the buyer. Okay? So you flash the trades, you see the orders come in, and you instantly arbitrage everything in a millisecond. So you always made money. Every time. 100% of the time, you always made money. Because essentially what they were doing, think of it this way. What if JP Morgan came to you, gave you $38 million in cash, and they said, "Would you buy some Apple shares for us?" And you'll say, "Okay, but I charge a 0.1% fee." And they're like, "We're cool with that." That's all that's happened. So now you take their money and you buy the shares. Okay? And you make your money. The thing is, they were doing it in sort of reverse. They would learn JP Morgan was going to do it. They would buy the shares first and then sell it to them and essentially take like a commission, except JP Morgan didn't want them involved at all. They were front running everything. So it was just free money, literally free money. You might make $700,000 in a half a second. And you do it 4 times a day, 8 times a day, 12 times a day, 20 times a day. Never had any risk. Right. So if the legitimate way to do it, right, pure mathematics is you're like, oh, you charge a spread or a commission, right? In this case, they would just do it, and it's like they earned a spread on it, right? So, and the thing is, it was a long time before people figured it out. So, like, let's say your Apple shares were $138.38. Would you notice if you bought them for $138.39 or 42 cents or whatever it was, right? You wouldn't even really care. You're like, but they just did it all the time. Well, no, it doesn't work in Forex because you need multiple exchanges. Oh, Kyle wants me to go back to, yeah, good. I'm glad you asked because I don't know what you know and I don't know what you don't know. You get paid, there's 2 ways in Forex to get paid: asset appreciation, okay, and income. So if you bought a Turkish bond, how much would they pay you? What is the yield on Turkish 10-year? Anyone want to Google it? Turkish 10-year bond yield. Okay. See? Okay. So if you loan Turkey money, and this is what we do, by the way, we're really bond traders. This is what we do. Okay? This is how you really should think about what you do. This is way different than the kids that are trying to scalp and get rich quick. This is like, you know, you're wearing your big, you're okay. I can think of like 10 funny ways of saying it. I can't even say the non-funny way. Anyways, I was trying to say big boy or the big girl panties or something. But anyways, this is how an adult does this. This is how a bank does this. So you need to think of yourself like a banker. I'm an international financier. How'd you like to tell that to your friends? They're like, oh, what do you do for a living? You're at a party or something. Oh, I'm an international financier. And they're like, really? You're like, yes, I lend money to sovereigns. Dude, it just sounds cool, right? I am an international financier. I lend money to sovereigns. Nice. So you lend the good people of Turkey money. Essentially, you buy a bond. And as long as you own the bond, you're going to get paid 12%. Now, interest rates may go up. The interesting thing about what we do is it's not a bond, it's actual cash. So you actually just put cash into their bank, you loan them cash. So if Turkey raises rates to 14 or 15% over the next couple of months because of the global economic situation, you actually get a raise. Now, if you actually bought a Turkish lira bond and interest rates went from 12% to 15%, you own a bond and it only pays you the face value that it actually says on the certificate. In cash, if the Central Bank of Turkey raises interest rates, you actually get a raise. You get paid more than you used to. This is a benefit of being a currency trader beyond a bond trader. You lend cash. Okay, cool. But let's just say the 12%. Now, the problem is you've converted your situation into Turkish lira. So if Turkish lira loses value, you're still going to get paid your 12%. But the asset has depreciated. You still got the income, but your asset has depreciated. And so you got to be smart here when you trade this. Luckily, as a currency trader, you also have stop losses. So if you were going to lend Turkey dollars, okay, then you need to put a stop loss up here. And you're shorting. This is the only way to do this, is short. Okay, this only works if you're shorting. Why is that? Because when you short, you are lending Turkey your US dollars. Okay? Okay? Great. So, going back to this. If this falls, what's happening? The value of the Turkish lira is going up. Your asset is appreciating. So you'll make money as the USD Turkish lira falls, you'll make pips. Your asset is appreciating. The value of the asset you hold, which is this loan, goes up. Plus, you're earning 12%. Now, here's the real kicker. By the way, are you guys happy with 12% a year? Mr. Highville, I've never had an ECN account. I love variable spreads. Okay, I like soft dollars. So I've never had one, so honestly, I don't know. Okay? So here's the real kicker, because 12% is pretty good, right? 12% a year is pretty good. Guaranteed. In fact, you get paid 12% divided by 365 every day. You don't have to wait till the end of the year. You don't have to wait till the end of the quarter. You don't have to wait till the end of the month. Every single day at 5 o'clock, you get paid 1/365th of your 12% annual. You get paid every single day. So now that's even better, right? It's like you own the apartment building and every day you collect 1 day's rent. It's like owning a hotel, I suppose, right? You own the hotel, the value of the hotel can go up. The actual land and the actual building can go up in value. But every single day you collect rent from your hotel guests. Okay? Now, I can make this even better because that's good, right? But this can get better. You are leveraged. So you go and you say, hey, if I pony up $1 US dollar in my Forex trading account, how many dollars can I trade? And they're like, you can have $100. Okay? So if you ponied up $100 and lent Turkey $100, you're going to earn $12.29, right? Per year, plus any asset appreciation. Plus your lira going up or down, right? Now here's the cool thing. That's great. But you only have $1 invested. So think of it this way. Now, just with interest, you'll earn 1,200% on your dollar, plus any increase in the value of the Turkish lira, which could be easily another 1,200%. Easy. It could be 10,000% over the course of a year. But what happened to me was at the end of 10 months, I got knocked out at zero, at break even, 0 pips. But I held it for 10 months. Okay? Which means, I'm sorry to say, right, that I only made 1,000%. It was a sad day. It was a sad day. Oh, only made 1,000%. So that leverage now really makes you a baller, huh? You were blind, but now you see. Oh my God. Okay. Okay. All right. So yeah, so this is why you have to have a good broker. 7IBN says something about you got to watch your swaps. Check it out. Here's how you do it. And if you do this, you'll see that Trader's Way is extremely competitive. So you open your broker. If you're not using Trader's Way right now, you can open your broker and say, go to USD Turkish Lira, click it, and then highlight specification. Okay? And look at your swap short. This is what you get paid in pips. Okay? I look at it as percentage. So I looked at this and I knew it would be less than 14%. So I think I said about 12%, right? And I just guessed that. And then of course, so I looked at this and I can guess the interest rate. So anyways, you might be using a different broker and you'll open up the same contract, USD Turkish Lira, and you might see a negative in front of your short swap and your long swap, which means it doesn't matter which way you're trading, you will lose money on the swap. Okay? That happens to a lot of people that choose, and it's not that the other brokers are bad, it's that they're trying to make money on really traders that don't care about things like carry trading. You got to understand, the vast majority of retail Forex traders are just children that want to get rich quick and scalp their way in and into their palace and into their exotic cars and beautiful women around the pool and their parties on their yacht, and they think they can do it with a $500 account and they can do it with scalping. That's the vast majority of the market, and so they don't know anything about like acting like an international financier and lending Turkey money and collecting interest, right? They don't even think that way. They don't think like business people like you and I, okay? So in that case, their clients don't even care. So why would you pay them an interest payment? As a broker, you should charge them. So that's what's happening with probably a lot of you guys. You're in with brokers that would probably charge you either way. Okay? Now, Trader's Way is very transparent in the sense that it will enter your trades in the interbanking system. We know that. We've seen it through history. It's not a press release. We've seen it through actual history. Okay? I'm talking about the Swiss National Bank stuff. Okay? The other thing you can see here is they give you an amazing swap. Like, holy smack. Well, that's probably the full swap. This is probably better than what Goldman Sachs would give you. Okay? So 12%. Okay, so let me go over it again. 12%. I got to go back here. Oh, I got this over. All right, let's close this. So just in case you didn't understand. Okay. Okay. So you're earning, let's say you pony up $1,000, and let's say that's enough to buy one contract. Okay? Which means this is worth $10,000. So now you're loaning Turkey $10,000, and Turkey will pay you 12%. Oh, that's supposed to be a percent. Okay? Come on, eraser. All right. And so you make a deal with Turkey. I'll lend you money, Turkey, and you're going to pay me 12% a year. You only have $1,000 on this trade, guys. Oh, yes, that's right. It should be 100,000. Okay. So you lend Turkey $100,000. Your leverage 100 to 1. Okay? You've ponied up $1,000 in collateral in your Trader's Way account, and you trade 100,000, and then you loan. So what you're doing is you're going now to the Fed basically and borrowing $100,000. You put up $1,000 collateral, and then you lend the $100,000 to Turkey, and Turkey pays you 12%. So if you make 0 pips, you will earn $12,000 in 1 year in just the interest payments. Do you understand that? But you only have $1,000 of your cash tied up into this trade. You made $12,000 you collected in income payments, right? In interest. You picked up 12, not percent, I meant to draw dollars. I can't talk and draw at the same time, apparently. You collected $12,000 in interest payments, and you only have $1,000 invested into this trade. And by the way, if you really catch a trend, you can be in this 5 years and collect $12,000 per year, but you still only have $1,000. Okay? Yes. First of all, you wouldn't put all your money on one trade unless you're an absolute fool. Okay? I'm saying this is small. So, right? And I'm also telling you, if your plan was this next week and you get a trade, you put your stop here. So you're risking $500 probably. So you better have, you better have at least 25,000 in your account for something like that, right? You're like, I don't have 25,000. I only have 2,500. Well, then only put one mini lot. But in that case, you have $100 of your cash invested, and you're lending Turkey $10,000. And you'll earn $1,200 per year on your $100 investment. Well, that's pretty darn good too. Yes, and KG brings out a point, right? Only if you short. If you buy this, the opposite will happen to you. In this case, you'll pay 500% a year to be long. You will be guaranteed to lose at least 500%, which means on a one mini lot, it'll cost you $500 to hold a long position for a year, and you only invested $100. So you don't want to be long. That's not a carry trade. That's just a stupid trade. Okay? But a carry trade earns the carry, and carry means yield, and yield means interest payments, and interest payments is a form of income. Okay? Okay? So, again, if you're going to trade only trade short, only trade double top or some other reversal at an obvious resistance with improving global macro econ conditions. It's the only way to do it. So a fool would just listen to what I say and then boom, sell this. That's what a fool would do. Someone else would instead use long-term fundamental and technical analysis and then develop a trade plan and then manage the risk. So does this look like a good sell? No, it does not. Will it look like a good sell sometime in the future? Yes. Oops. And earlier I was talking about Euro Yen. Okay, and I'll show you why. Euro Turkish lira, sorry. Because it pays even more money. You see this? Pays you even more money because Europe will pay you money to borrow their money. So the European banks will actually pay you to borrow their money. So you borrow their money and make money on borrowing money and then lend that money to Turkey and then charge them. So now you're double dipping, getting paid by both banks. Okay? But what I was saying is, yes, this looks like it's set up to maybe fall. Yes, over the last couple of days, it looks like a little bit of risk on. Yes, this is the projected place for profit taking on this long. But I also said I anticipate or would like it to, or might consider it, to go as high as 8 before I sell it. So now I need a down, an up, a reversal pattern, and then sell. And then when I do sell, I will never get out because I will earn 1,500% a year. And if I earn 1,500% a year, I want to earn 1,500% for many years. Because once I'm in the trade, there's nothing more for me to do. Once you own the apartment building, all you have to do is show up to your management company's office once a month and say, "Give me my rent." And they say, "Yes, sir, Mr. McDonald, here is your rent." And I say, "I'll see you next month," and I leave. Okay? So, if all of this is new to you, there's a link in the description below to join our live groups. There's a link in the description below to get all the training videos for 80% off because of COVID. So I'd rather you binge watch videos about Forex and not about tigers. Okay? So that's why it's 80% off. This is your opportunity to take a fundamentals course where about hour 4 into the training course, you will already know how to manage the balance sheet of a commercial bank. And then, with that knowledge in your brain, then we have the opportunity to start talking about central banking and central bankers and policies. So if you don't know the difference between the Fed rate, the prime rate, and the discount rate, then you need an education if you're going to be a Forex trader. So grab the education, 80% off. Okay. By the way, I'm taking the offer off the table probably very, very, very early in May. So you have about 10 days left to get that COVID deal, and then I'm taking it down. It's in the link below, Charlie. So Chuck, look at the link in the description below the video. All right, cool. Happy Friday. I hope you enjoyed today's webinar. I'm so tired. It's just Friday, man. It's the end of the week. I got some papers to write, but I'd rather be running around the yard or something like that, or maybe I'll go for a kayak with my children. But long week, that's all. So cool. So please visit tradersway.com if you liked what I showed you about the spreads. Like whatever, if you don't use Trader's Way, just look at your dumb broker now. Pull up this window, this market watch. Highlight the specification and see if your broker pays you less. The way I look at that is 17.85. It has to do with adding zeros and stuff. But just imagine you're earning this swap. And if your broker's paying you less, then Trader's Way has the advantage. You might even find your broker actually charges you whether you're long or short. You're guaranteed to lose money. Therefore, it's impossible for you to carry trade. And if you don't like that, then maybe consider switching over to Trader's Way. Okay? I'm just saying compare apples to apples. Open up your chart, open up your market watch, and compare like USD Turkish lira. Again, you go up, you highlight specification, right? You'll earn this or when you're short. If your broker charges you money, then you cannot carry trade. You don't have the opportunity. It's impossible for you to carry trade. You'll always lose money with that broker. So it might be an opportunity for you to say, maybe I should check out the TW, right? Maybe I'll check out the T-dub. All right. So in that case, you'll have to throw your diamonds in the sky. So peace on earth. May the pips be with you. May your profits be above average. And I will see you. Well, if you're in my live trading group, I'll see you Sunday afternoon to plan out Monday and really kind of set up, trades for Thursday swing if you didn't get it. And if you're not in the live trading group, then I will see you Monday morning at 8 a.m. New York time here at Forex.Today YouTube channel. Make sure you subscribe, guys. Peace out. Stay safe. Stay healthy. Be good. Be kind. Maybe spend the whole weekend watch training videos, huh? Wink, wink. Wink, wink. Nudge, nudge. Aye. Yeah, Dan Tucker, if your broker doesn't even list it, it probably ain't that good.